Good morning, everyone. Welcome. Get settled. We have a great webinar ahead of us today. Carr, and Ingram is presenting this webinar on Statement 103 of the GASB, Financial Reporting Model Improvements. This is a CPE webinar, and you get 1 credit for every 50 minutes, so that means 2 CPE credits today, and although there is no partial CPE, now there appears to, I'm sorry, this is a great way to start a webinar. It appears that no one can hear me. Okay, if one of my fellow panelists could confirm that you can in fact hear me now speaking, that would be great. Awesome. All right, I'm so sorry. Let's just go back 1 slide and look at the intro, and I'll start again. The good news is that gave some people more time to get settled and get the full time. So this is a Carr, and Ingram webinar, a deep dive into GASB Statement 103's Financial Reporting Model Improvements. It is a CPE webinar, so if you stay for the full time, you will get 2 credits in accounting, governmental, and technical field of study. There is no partial CPE, however, offered for this event. Please be sure that you have logged in with your unique link and that you stay logged in for the entire webinar to ensure that you receive your CPE credit. Participants must answer 80% of the poll questions to receive CPE credit. So there are 8 of them altogether, which means you need to answer at least 7. My suggestion is answer all 8, just in case there's a technical glitch. You will receive your certificate by email within the next 7 days, and the email address is here. So you want to make sure that your system doesn't treat that as junk mail. If you don't see the email within 7 days, you might want to look in there to see if it accidentally got pulled out as spam. There is a PDF of the handout version of the presentation slides, which is available for you to download through the Zoom chat. The chat is otherwise not usable by attendees, but if you have questions, please feel free to use the Q&A function, and we will do our best to answer those questions as we're going along. We have 4 fantastic presenters from CRI today that I am thrilled to be working with, and I think you will find that they are all interesting and informative, and you're going to learn a lot from them. The 4 are Lindsay Aviles from our Melbourne, Florida office, Leanne Cross from our Hattiesburg, Mississippi office, Adam Nelson out of Niceville, Florida, and Patrick Smith out of Bradenton, Florida. They are terrific, and I think you're really going to enjoy their presentation. My name is Dean Mead. I'm going to serve as moderator, and I'll present some of the early slides and hopefully not reduce the overall interesting nature of this presentation. So our webinar today is a deep dive into GASB Statement 103, which the GASB approved unanimously in April of this year and posted to its website on May 28th. If you're not familiar with the term, the financial reporting model essentially is the blueprint for financial reports that are prepared following generally accepted accounting principles, or GAAP, GAAP. It's mostly contained in GASB Statement number 34, Basic Financial Statements and Management's Discussion and Analysis for State and Local Governments, which was issued way back in the dark ages of June 1999. But it also includes Statement 35 for colleges and universities, Statement 37, which was an omnibus that dealt with some of the early practice issues that came up with implementation of 34, Statement 41 on budgetary comparisons when there are perspective differences, and Statement 46 on restrictions deriving from enabling legislation, as well as Interpretation 6. We'd like to begin with a brief background to put the new standards in context and explain where they came from and why. And then the agenda for today's webinar is to go over each of the provisions of Statement 103, more or less in the order that they appear in the statement. We will get started on that in a moment, but first, let's do poll question number 1. So, poll question number 1 is, have you read any part of GASB Statement 103 since it was posted to the GASB website? A, yes, all of it. B, yes, but just the standard section. C, yes, but just the summary. Or D, nope. I'll just give you a moment to answer. It looks like almost everybody has answered. Clearly, there's no right answer to this question, although really A, personally, I feel was the right answer. But you're in the right place if you haven't read any of this yet, because we're going to tell you what it's all about and talk a little bit about what you need to do to get ready to implement this when the standards become effective. So I'm going to end the poll right there. It looks like almost everybody has answered. The answer that is most common is nope, 60% of you, and about 30% of you have read just the summary. So this is timely then. You're going to learn an awful lot about what Statement 103 is all about, and then hopefully you'll go and take a look for yourself at the at the statement, and you'll already be familiar with it because of what you hear from the terrific speakers today. So let's cover a little bit of background here and set the context for today's discussion. Governments have been following the existing financial reporting model standards for at least 20 years now. And when the standards had been in effect for about 10 years, as the GASB usually does with really significant pronouncements, it started pre-agenda research to evaluate the effectiveness of the standards in practice. And that was, in fact, a very high priority of then GASB Chair Dave Vout, whose term started in 2013, which is when the pre-agenda research examining Statement 34 and the other reporting model standards started. And as you can see from this slide here, that research was quite extensive. It lasted for 2 years, and it involved almost 800 people, finance officers, government managers, CPAs in private firms and in state auditor offices, legislators and legislative staff, municipal bond analysts, taxpayer associations, academics, all kinds of stakeholders participated in this research. And to the extent that there was a consensus, I would say it was that the reporting model standards were, in fact, effective and were resulting in a lot of valuable information for decision-making and analyses and accountability. That being said, the research participants, as you might imagine, had a lot of ideas about how the reporting model could be improved. And so based on that feedback, the GASB initiated a standard-setting project in 2015. So you can see they've been working on this for a real long time, given that it's now 2024. They went through 3 rounds of due process, issuing proposals for public comment and then examining the responses to those proposals and revising them and putting them out for public comment again. In total, for those 3 due process documents, GASB received 541 comment letters, 123 individuals and organizations testified at public hearings, 69 financial statement users participated in forum discussions with the board and staff, and 67 governments completed a field test of the proposed standards. So quite a lot went into producing Statement 103. I don't think anyone could say they didn't have ample opportunity to make their voice heard. And you will learn, I think, as we're going through the provisions of Statement 103 today, that GASB did take a lot of that comment to heart and made very significant changes. One in particular that I'll talk about in a moment in response to the things that they were hearing from people who responded to the proposals. So these are the things, as we saw in the agenda slide, that Statement 103 ultimately included. But there were some other things that were recommended that the GASB examine, provisions of the reporting model standards that GASB did take a look at, but that ultimately didn't make their way into Statement 103. And there are four of particular significance. One is debt service information. Prior to Statement 34, if you're as old as I am, you remember that debt service funds, like other governmental funds, were aggregated by fund type. So you saw all of them in a single column on the face of the governmental fund financial statements. But Statement 34 introduced major fund reporting, in which the largest single funds were shown in their own columns and all the smaller funds aggregated together in one column. And consequently, because debt service funds don't tend to be particularly large relative to the general fund and other funds, you often do not see any debt service funds on the face of the financial statements. And if a government is not preparing an annual comprehensive financial report, or ACFR, you're not getting the combining statements that might have shown those debt service funds individually. So GASB considered several ways to provide readers of the financial statements with debt service information, including requiring that the largest debt service fund be reported as major, or that all of the debt service funds in the aggregate be reported as a major fund, or additional disclosure. But ultimately, GASB concluded that the options either weren't workable or they weren't consistent with the overall structure of the reporting model. The second thing that didn't make the cut was a government-wide schedule of expenses by natural classification. In other words, salaries, rent, utilities, and so on, for each program, function, and identifiable activity. The GASB did actually propose that in the preliminary views, and it got a lot of support as being something that was potentially very useful to financial statement users, but a lot of respondents were very concerned about the cost of preparing it, and ultimately that's the reason why GASB didn't continue with that when they put out the exposure draft in 2020. The third item would have been a government-wide or governmental funds cash flow statement. Although that's potentially beneficial, GASB concluded that its benefits wouldn't justify the cost, in part because the information already reported in governmental fund statements and in budgetary comparisons serve similar purposes because the information is similar to cash. The fourth, and by far the biggest omission, and if you didn't know about this, you're going to be very excited, is that GASB dropped the governmental fund financial statements from the scope of Statement 103. This, I don't think it's an exaggeration to say, was the centerpiece of this project from the very beginning. GASB and pretty much everybody else was well aware of the shortcomings of current financial resources and modified accrual as the measurement, focus, and basis of accounting of governmental funds. They certainly knew about it when they were working on Statement 34, but really just couldn't handle dealing with that at the same time they were introducing all of the other new changes that Statement 34 brought in. So it wasn't any surprise that when GASB added this project in 2015, that front and center was developing a new measurement, focus, and basis of accounting for the governmental funds. So why didn't it make the cut? Why, about almost exactly a year ago, did the board vote to drop it from the project? The GASB's intent here was to start from scratch and to develop a conceptually pure measurement, focus, and basis of accounting that wouldn't have the glitches and exceptions and oddities that are in current financial resources now, most notably the fact that there are things that are in the governmental funds that are not current or not financial or neither current nor financial. And GASB, in fact, in all three of the due process documents, proposed new standards in that vein. In fact, the first document, the invitation to comment, was just about the measurement, focus, and basis of accounting. And what GASB ended up proposing was a short-term financial resources measurement focus on an accrual basis of accounting, as well as some changes to the presentation and terminology of the financial statements to go along with that change in measurement, focus, and basis of accounting. But what led the board to make the decision last June to drop it was in order to address the various issues that had been raised by stakeholders, the GASB got to a point where it felt like it wasn't working any longer on something that was conceptually pure, but it had all of its own exceptions and alternatives and options. And in the end, they decided that the cost of complying with this new measurement focus and basis of accounting would no longer have been justified by the benefits that users would have gotten out of it. And that's why they dropped it. They have not given up entirely on making some improvements to the measurement focus and basis of accounting. There is a potential project in GASB's technical plan now to make improvements to the measurement focus and basis of accounting, but not a clean slate. Some people have used the word tweaking, not a great word in standard setting, and I think not giving full due to what these changes would be, even though they wouldn't be starting from scratch and might just be nibbling around at the edges. But two of the things that are provided as examples in GASB's technical plan of the kinds of things they might do are establishing a consistent availability period for recognition of all revenue in the governmental funds. As you know, right now, 60 days is stipulated for property tax revenue, but no specific time frame is set for the availability period for any other kind of revenue. And the other item identified as a possible area that they might work on would be to amend the recognition and measurement criteria for long-term receivables and other similar transactions. It's not clear if or when the GASB will start working on that project, but when we learn more, we'll let you know. That brings us to our second polling question, which I will launch now. Which topic was dropped from the scope of Statement 103? A, MD&A, Management's Discussion and Analysis. B, defining operating and non-operating. C, unusual or infrequent items. Or D, governmental fund financial statements. We'll give you a moment to catch up on that. I know that a lot of people are very excited about the fact that the governmental fund financial statements part of Statement 103 was dropped. And I can't argue with the board's decision. They are, I think, were right that it was becoming somewhat complex and perhaps no less complex than the existing measurement focus and basis of accounting. But I do want to point out that hundreds and hundreds of people responded to the research and to the proposals, and the staff put in tens of thousands of hours of work on this. And so it wasn't an easy decision for the board to make after having put all that work into it and having asked all of you to give them input on how best to frame that measurement focus and basis of accounting. So it looks like pretty much everybody has responded at this point. I will end the poll and share the results with you. Yes, the answer is governmental fund financial statements. That's the thing that was dropped. But a reminder, you don't have to get the right answers for them to count for the CPE. You just need to answer. So with that, I'm going to turn it over to Pat and to Adam, and they're going to talk about the changes that Statement 103 will require for MD&A.
Thanks, Dean. So one of the bigger sections of GASB 103 is obviously the MD&A. So the improvements to the MD&A are intended to address some of the shortcomings in practice that make this section more useful. So this slide's showing a breakout of the different areas of the changes to the MD&A. We're going to go into more detail in the following slides, but it's going to be broken out by section title, target reader, emphasis on explaining why, avoiding duplication, significant capital asset activity, significant long-term financing activity, currently known facts, decisions, and conditions, and then discussions on budget variances and the modified approach. Dean, if you could go to the next slide. So Statement 103 doesn't actually require the section titles to be used, but their inclusion is obviously is intended to help clarify the objectives of each section. So for instance, the overview of financial statements, as the title suggests, needs to be as lengthy as a brief discussion of the basic financial statements. That's basically what 34 is called, that GASB 34 had called for, and it's often in practice. It may be a good idea to adopt these section titles when implementing statement 103. If when you're reading 103, if you look back in the appendix C, there's actually a nice illustration that gives basically different section titles with similar headings to this that we've shown here, with overview of financial statements, maybe the types of information in the financial statements, and then analysis. But any information presented in MD&A should be confined basically to these specific topics. Any information that doesn't relate to these topics shouldn't be an MD&A, but should maybe be elsewhere, like maybe the letter of transmittal or other forms of supplementary information. So if you want to go to the next slide, we'll talk about the MD&A target reader. So as 103 indicates, the target reader for MD&A is not as knowledgeable as the target user of the other contents of the financial report. So this decision seems to be implicitly saying that some readers of the MD&A will not only read the MD&A, they'll read the MD&A, but they won't read the rest of the report, which is kind of a departure from GASB's statement 34, in which it stated that the MD&A was intended to help the users read the rest of the financial report. Were more knowledgeable, and it would give more benefit out of the information, but it was not intended as a standalone document. However, going forward, the authors of the MD&A may need to presume that the person reading the MD&A doesn't necessarily know much about government accounting and financial reporting. And you should also be cognizant that the reader might not even be from your local area. So you want to take that into consideration as you're developing your MD&A. If you want to go to the next slide, Dean, we'll talk about the overview. So as you can see here, you see the breakouts of the statement 34 now and then compared to 103. So statement 34, you give a brief description of the basic financial statements and the relationship to the statements, and then a discussion to assist the reader in understanding why the measurements and the results, had changed. And then 103 is basically saying, that you give an overview of the statements, including the relationship to the statements, and an overview should focus on significant differences in types of information that the financial statements provide. So in practice, this section can be very long and read kind of a lot like a note disclosure, maybe the summary of significant accounting policies, neither of which is helpful. The illustrated MD&A in statement 103 has some really useful graphics that the government should consider adopting and copying, assuming that they're applicable to them specifically. So you'll see this one specifically. You can see that everybody really loves graphics. It just helps you follow statements, maybe possibly better than actually having paragraphs. You can go to the next slide. Dean will show them what the next one looks like. So this, again, is just another good graphic that you might consider including in your MD&A, help the reader. Go to this next slide here. So one of the current practices this provision 103 is intended to fix is that ladder analysis, right? So you say, X went up, Y went down, and you don't really explain why. And so anyone can just look at a summary of financial information and see what changed. And not really understand how it changed. And that's basically what they're trying to get at here with 103 is you want to be able to give the reader the reasons for the change. By doing that, you're going to add values. Management can add this value by sharing their firsthand knowledge, the story behind the numbers, basically, right? So As the name suggests, the MD&A should discuss and analyze, basically. With that, I'll turn it over to you, Adam, so you can talk about the next section. Oh, polling question first.
Yeah, let's stick a polling question in there before we move on. Which of the following is not a section of MD&A under Statement 103? Overview of the financial statements, detailed analyses, significant non-financial activity, or currently known facts, decisions, or conditions. Hey, Pat, while I have you, you were talking about those graphics that come from the illustrated MD&A in Statement 103, and looking at that second one that described the different measurement focuses and bases of accounting for the different groups of financial statements. It kind of struck me that if you put a chart together that well, you don't really need very much text to accompany it in order to get the required communication across.
Exactly. It's so much, I think, to me, it's just so much easier to read when you have a graphic, presentation like that.
And Statement 103 does encourage, like Statement 34 did, that governments think imaginatively about how they can present the information, use graphics to the extent possible that add to what you're getting out of the narrative in MD&A rather than duplicating it or presenting something that isn't necessarily relevant to that section.
And I know that 103 isn't supposed to be implemented for another couple of years, but this is one where you look at it and you say, you know what, this would actually be a good one to early implement. And, it might be something for people to consider because it's just adding benefit to the financial statements.
I would agree. I don't think there's much that Statement 103 requires for MD&A that couldn't be done now under the provisions of Statement 34. So let me end the poll. Most of you, almost half, answered significant non-financial activity. That definitely is not a section, a required section, or even an optional section of Statement 103 for MD&A. Let's move on. I'll close this out and turn it over to Adam to continue talking about MD&A.
All right, thanks, Dean. One of the things that I kind of really like about 103 that they're actually addressing, because it was always a pet peeve of mine, was the repetition that sometimes we found in the MD&A, especially when we were describing any of our changes between, say, the government-wide and the fund level financial analysis. And GASB found that repetition at length into the MD&A unnecessarily was one of the most frequent criticisms of the MD&A when they were holding their research for Statement 103. So therefore, they implemented that paragraph 6 contains an example regarding avoiding duplication. And a tax rate increase may affect the results in both the government-wide and the governmental financial statements. After the increase is discussed in the analysis of the government-wide financials, that discussion could be referenced to the analysis of the major funds rather than duplicated. And I can't tell you from all the ones I have reviewed how this is just, you'll find that a lot of issues are regurgitated in the fund level versus the government-wide level financials. Now, what 103 also puts in there is that determining whether or not to repeat explanations, it's a matter of professional judgment. You may see that it's necessary or you want to include it multiple places. That's allowed, but really we should try to avoid it if possible, as it is unnecessary. Also, if you want to talk about your change, maybe you issued new debt, so there's a significant increase in debt at the government-wide level. You can talk about that in the government-wide analysis, as well as you can go back in the long-term debt analysis or long-term financing analysis, as we'll get to later. You can simply make a reference to the discussion that was previously documented. Moving on now to talk about our government-wide analysis. Some of this has a little bit of more what I would, and I know I'm going to use the word tweaking a lot. I heard Dean not really like that word for standard setting, but I've found a lot of 103, in my opinion, does tweak or get a little more precise in the wordings than GASB 34 did. we're still required to have an analysis of the government's overall financial position and results from operations. Under 34, you had to specifically determine or state whether the financial position improved or deteriorated during the year being reported on. That no longer is a requirement that we have to say. However, we do have to summarize now the significant changes in both the governmental and business type activities that are reported in the government-wide financials. Under 34, you include the reasons for the significant changes from the prior year. Under 103, they go and elaborate, or in my words, tweak and say, you need to explain the reasons why the significant changes occurred, not just the reason. And you also need to indicate their magnitude. And the requirement to indicate the magnitude suggests that the usage of percentage changes and percentage distributions or other common size ratios, such as per capita, would be really critical as we start to implement 103 into our MD&A section. Next slide, Dean. Continuing on with our government-wide analysis of some of the changes. Under 34, it was important to include economic factors that affected your year. 103 wants you to include facts, decisions, and conditions the users may not be aware of that had an effect on the financial information, as well as to include any significant policy changes or economic factors that affected the operating results. What they're really looking for is they want you to talk about things that let's say, for example, we have a significant change in our investments, and a large portion of that may be because of a change in the market condition. Most of the readers of the financial statements will know that information, but maybe also the government that year changed their investment policies and how much they invested in one type of investment vehicle versus the other. That may be something that the user of the financials was not aware of. 103 wants you to include both of those pieces of information, not just the ones that users may be aware of. And also, they don't want you to exclude the information the users might be aware of and to just assume that they would know that information. So now we just had kind of adding a little more flavor to our GASB 30, our MD&A analysis. Next slide, Dean. Now we're moving on to our fund level analysis. And again, 103 is getting a little more precise in what they want us to talk about. Under 34, they wanted us to do an analysis of balances and transactions in the individual funds. 103 went on further to say those analysis should be for each major fund, not just individual funds. So again, we're going to start tying in what we're reporting on in the basic financial statement to what we're reporting on in the MD&A. It also wants you, and this kind of goes back to that government-wide stuff we previously spoke about. It wants you to explain the why the significant changes occurred, as well as the magnitude. And this is really where our discussion previously about avoiding repetition really is going to start to come into play. And then one thing that does remain the same between the two is that under 34 and under 103, it still remains that you do need to discuss whether there are any restrictions or limitations on the fund balance that the government can use for future purposes. Next slide, Dean. In the significant capital asset activity section of the MD&A, under 34, you're required to give a description of capital asset activity during the year, a discussion of commitments made for capital expenditures. Under 103, we still have most of that is still the same. However, again, get a little more precise, and it wants to know the significant capital asset activity during the year, including intangible assets. So they specifically are carving that out. It's making sure we get that. And some more detailed information they want you to include is a discussion on the significant additions and deletions and changes to commitments made for the acquisition of fixed assets. And then similar to what we were talking about in the government-wide and fund level analysis, They want you to also include any policies changes that may have occurred relating to capital assets, as well as any economic factors. Again, it goes back to, we want you to include what you may think the users of the financial statements already know, as well as if there's any policy changes that affected that. Again, I want to reiterate that 103 identifies significant additions and disposals as something to be discussed, which that is not mentioned in GASB 34. Next slide, Dean. The next section we're going to talk about is the long-term financing activity section. Under 34, they asked for a discussion of significant long-term debt activity during the year. They also wanted you to cover any changes in credit ratings, as well as any changes in the debt limitation, which may have an effect on future planning. Under 103, they have changed that. Instead of saying long-term debt, they have changed it to long-term financing activity. And after we've gone through the last couple of years of implementing the new lease standard under 87 and the CIBITA standard under GASB 96, they want those to now be included in this section of the MD&A where we discuss long-term financing activities. Similar to 34, you still have to talk about your changes in credit ratings if they occurred, as well as any changes in the debt limitations that may have occurred. And we go back to what we've kind of been a running theme here, is that GASB with 103 really wants the governments to address any significant policy changes or economic factors that affected long-term financing activity and affected the sections that are being discussed in the MD&A as well. I think that brings us to a polling question, Dean.
Indeed, it does. So polling question number 4, which of the following would be useful in the analysis of fund level information? Explanations of why amounts changed, percentage changes in amounts from the prior year, relevant events the reader may not be aware of, or all of the above. I want to emphasize something that both Pat and Adam have discussed. And Pat mentioned it very quickly, referring to ladder analysis. That has to be one of the things that people most dislike when they see it in MD&A. Rather than analysis, it's essentially just saying this went up, this went down, and not explaining why. MD&A has to have these summary financial information tables in them, so anybody looking at them can tell what went up and what went down, and probably be able to tell what went up by a lot and what didn't. What the government needs to add, what management needs to add to MD&A, is their unique and particular insight into why those things happened. And I don't think it can be emphasized enough that the point of MD&A is not to present the same information you're seeing elsewhere in the financial report, but to add to that by giving an explanation that you may not see anywhere else in the financial report. That's the value added of MD&A. It is, after all, called management's discussion and analysis. And one of the common criticisms during the research that GASB conducted was that some MD&A just didn't have any discussion or analysis. So that's a really important emphasis of Statement 103. I think I'll end the poll now and share the results. And 95% of you are absolutely right, although I guess this could be a matter of opinion. But these are things that GASB has identified in Statement 103 as being helpful in getting the fullest out of the usefulness of MD&A.
Okay, so one of the things we'll note with 34 right now as it stands is, it requires a description of the currently known facts, decisions, and conditions that are expected to have a significant effect on the financial position or results of operations. And what 34 is adding here is, you also need to discuss things that are expected to produce significant differences from current period results of operations. So this information doesn't identify specific effects on the government's finances or explain changes in finances for the current period. It just doesn't belong in this section. So let's go to the next slide and we'll see some different examples of current known facts. So examples of types of information that shouldn't be included, if applicable to your specific entity, would be so trends in relevant economic and demographic data, relevant factors used to develop the subsequent year's budget that indicate how results of operations are expected to change in the subsequent year, such as those that are expected to result in maybe changes in the total amount available for appropriation. Should refer as needed to relevant information about specific revenue sources. So maybe changes in your tax rates, fees, maybe change in the economic basis. Obviously, you know, with home sales and stuff fluctuating, your economic base is going to go up. Other ranges of activities which may apply. And then changes in planned spending should refer as needed to relevant factors. So maybe a big one right now would be inflation. Maybe the labor contracts, you know, there may be some changes in the labor contracts where you're going to have to spend more money. Any new laws or regulations, additions or expansions, maybe you're building new facilities and that's going to increase your spending. These are current known facts or projected facts, you know, that would be relevant in the MD&A that the reader is going to want to know about. That's I think more informative to readers, I think, than just doing the ladder effect like we were talking earlier, like what's going up, what's going down. And then Dean, if you want to just go to the next one, here's some more examples. Expected changes in the budgetary net position or fund balance. Maybe actions the government has taken related to maybe the pension or the OPEB or, you know, the SEBITAs, the leases, actions other parties will take to affect the government, such as new legislation or regulation imposed on the government. That's going to be a big factor, and that's going to be a big driver. And I think something that the reader is really going to, you know, that's what they're intending to see when they're reading the MD&A. It'll be really helpful. And then if we go to the next slide, this is back to you again, Adam.
Thanks, Pat. Some other changes that go on with the MD&A section as a result of the new GASB 103 is under 34, you are required to discuss currently known facts and information that was through the date of the auditor's report. Under 103, you are required to do that, to put down currently known facts through the date of the financial statements issuance. Now, most of us in the auditing world really try our very best to minimize the difference between the audit report date and the date issued. There's always circumstances that will pop up, and there may be a little bit of a time frame between the two. And should anything come up that affects the financials or would affect anything in the MD&A section, say market crash all of a sudden during the week between the two dates, management would have to go back and update that MD&A for that information to provide some known facts and information to the readers of the financial statement. Another thing that is a change is that the analysis of the budget comparisons, or the budget to actual, as I always call them, that is now being required to the discussion part of it. So what has changed? What are the significant differences? That is now being required to move into the RSI section of the financial statements or the financial package. And as well as it is no longer an option to have a budgetary comparison as part of your basic financial statements. That is now being required to be put in the required supplemental information. And lastly, your discussion in the MD&A under 34, you could have a discussion by your government about the use of your modified approach when it comes to your budgetary comparisons. That is no longer in there, and that is now moved to the RSI as well. So Patrick and I have spent, I don't know, last couple of minutes going over all these changes that are coming to the MD&A as part of GASB 103. Now you're probably sitting there thinking to yourself, okay, what does this mean for me? What does this mean for my city, town, county, special district, what have you? Well, first thing to do is I would suggest review your current MD&A and consider whether you have any revisions necessary. I know several clients of mine already have some of these things as part of their MD&A, such as making sure they explain why the balances and results from operations changed year over year. They have gone through and made sure to not be repetitive in their explanations of these changes and variances. You want to make sure you keep your target reader in mind. Who are the users of the financial statement? What do they maybe already know? What do they maybe not know that we need to now inform and include them? Also, we spent a little bit of time discussing that no longer is it just long-term debt activity that you're going to discuss in that section of MD&A. You're going to discuss the long-term financing activity. So now you're including your leases, your CBITAs, and your PPPs, etc. So I would also suggest begin working on your MD&A as soon after your fiscal year ends. Like Patrick mentioned, we have a little bit of time before the implementation is required. However, and Dean also mentioned this, and so the two of them kind of agreed that going ahead and really making some of these changes to your MD&A now is really going to be more beneficial, and it's only going to help the readers of the financials going forward. So waiting until you must do it is not necessarily what we would recommend. We would recommend making the changes as you can, as soon as you can. And with that, I think that's our next section. Do we have poll, or do we move on to the next person, Dean?
Nope, I think it's just directly to the next section. So I'm going to be going over the unusual and frequent item changes. As I was getting ready for this presentation, I think this change really makes sense. And so I think it's a good change, and a lot of us might not even have to deal with it. So I'm going to go over the differences. In GASB statement 34, the current statements, we have extraordinary and special items that should be reported at the bottom of the flow statements. And you're probably thinking you don't really remember seeing extraordinary or special items very often, which makes sense because they are rarely reported because they should be rare. But on top of that, oftentimes when they are currently reported, they don't even technically meet the definition of extraordinary and special. A lot of people get it wrong. So overall, the information just really hasn't been that useful in the type of information that financial statement users are looking for. And so under the current definitions, extraordinary items are transactions or other events that are both unusual in nature and infrequent. But special items are transactions that are within the control of management that are either unusual in nature or infrequent. So I can see how people get confused between what are the differences between those two. So the good news is that statement 103 is going to combine these two extraordinary special items into a single category of items. And they're going to be just called unusual in nature and or infrequent in occurrence. And so these items will be inflows and outflows from transactions and events that are unusual in nature, infrequent in occurrence, or both, and they should be presented last prior to the net change in resource flows of the statement. So they're going to be at the bottom. Inflows and outflows related to each unusual and infrequent item need to be presented separately, though. You don't net like any inflows with the outflows. And so in the next slides, I'll kind of show you what that looks like. Go ahead and go to the next slide, Dean. All right, so here's the specific definitions under GASB 103. It's really not that much of a change. It's just now they're going to be combined in a single category, which makes sense to me. So the unusual nature means the underlying event or transaction should possess a high degree of abnormality and be a type clearly unrelated to or only incidentally related to the ordinary typical activities of the government. And then infrequency of occurrence would be the underlying event or transaction should be of a type that would not reasonably be expected to recur in the foreseeable future. So just, as it relates to that specific government. So these definitions are a little bit broad and vague. I know we could go on and on for hours on examples and answer questions about what could fall under this, what might not, examples like that. I'm glad though overall that GASB is combining them into one category. It just makes more sense to me. For one example I think of easily is here in Florida, I'm in Florida, so near the coast. We get hurricanes a lot, so that would not be unusual or infrequent, I would think. We have had hurricanes back to back in many fiscal years. However, if Florida had an earthquake, I've lived here many years, I've never had an earthquake. Like, that would be extremely unusual. We don't have any volcanoes nearby. We don't have major fault lines. So that's probably an example of something you would disclose if there was some significant damage from an event like that. So next slide, Dean. Now, there will be some disclosure requirements if you do have to report one of these items, but it makes sense. There's just some minimum footnote disclosures that will go along with it. Under the current GASB 34, if you remember, an extraordinary item was an item that wasn't in management's control. So under this new statement, there's going to be some additional disclosures just describing specifically the program, the function, or the identifiable activity for which the event relates to. And then also the disclosures are going to say whether or not the item is within management's control. So basically, the government should describe what revenue or what expenditure items in the financials that the items would have been if they weren't unusual or infrequent. And then also how the event impacted the numbers and, you know, if management was able to control it or not, things like that. Next slide. All right, so here is an example, little snippet of financial statements where a city had a flood. So this flood was qualifying as unusual or infrequent for the city. And as you can see, there's this section right above the change in net position where it's titled unusual or infrequent items. And then it's titled flood damage, a specific event. However, please note there are two separate inflows and outflows, and they are not netted together. So this specific city had some cleanup expenses, but then they also actually got a grant to help fund some of that cleanup, and you do not net those together. You show them separately. And then there's also going to be a footnote that you would include that would describe the event. So in this case, the city experienced a flood during March 2025. That was a catastrophic event outside the control of management. So you specifically state that. The city incurred damages in the amount of 10 million attributable to the functions of, and then you specifically say public works, public safety, wherever it affected it, in the amounts of 8.35 million and 1.65 million respectively. The city also received 2.5 million in grants from the state to describe those revenues. So it's a really short and sweet footnote. It makes a lot of sense. You don't have to put too much work into it. Just describe what happened and make sure your inflows and outflows are not netted together. Next slide. Oh, whole question.
All right, that brings us to poll question number 5, which I'm clicking on launch and it's not launching. Give me 1 second. Did it launch? There we go. So poll question number 5 is, where in the GASB standards are the definitions of unusual nature and infrequency of occurrence located? Is it statement 34, statement 33, statement 62, or statement 103? One of the things to keep in mind here is, as Lindsay said, the underlying definitions of unusual nature and infrequency of occurrence have not changed. What GASB has changed is whether an inflow or outflow should be segregated from the other inflows and outflows in the financial statements, so that they are only, it can be either unusual or in nature or infrequent in occurrence. It doesn't have to be both, and whether it's within the control of management is no longer relevant. GASB, I think, has a potential project in its technical plan to go back and review the definitions of unusual nature and infrequency of occurrence, but at this point, they haven't indicated when they're going to do that project. So it looks like over 90% have answered. There actually is one question related to this that I think we can answer too, which is whether there is a specific period that defines what infrequent is, or is it a subjective decision? It's definitely a matter of professional judgment. And as I just mentioned, that definition of infrequency of occurrence has not changed. So that is an open question and a real subject of professional judgment right now, and that's not going to be resolved by Statement 103. So Statement 103 isn't attacking the underlying concepts and definitions. It is just changing the requirements for what is displayed separately on the face of the financial statements. I'll share the results. The answer is Statement 62, if you're interested in what the correct answer was. That's where GASB brought those definitions in from either FASB or AICPA literature in Statement 62, and those remain as they were.
So now we're going to talk about operating and non-operating revenues and expenses. As in Statement 34, Statement 103 continues, to require that the proprietary fund statement of revenues, expenses, and changes in fund net position continue to distinguish between operating and non-operating revenues and expenses. However, as part of 103, GASB often was getting questions about whether certain revenues were operating versus non-operating. And a lot of times governments were looking at their statement of cash flows to determine whether, was the revenue or expense, being reported as a non-capital activity or a capital and related financing activity or an investing activity. And it would normally not be reported as an operating income if it fell into one of those categories. Obviously, there were exceptions to this. So the determination of which revenues and expenses were operating versus non-operating, became a matter of professional judgment by the individual governments. So the purpose of this part of Statement 103 is to establish more explicit definitions to improve comparability across governments. At first, GASB attempted to try to define operating, but they found it was too difficult. So ultimately, it proved easier to specifically define the non-operating revenues and expenses, and then define operating revenues and expenses as everything else. So as you can see here on the right, Statement 103 provides a definition for non-operating revenues and expenses. And the first one is subsidies received and provided. This is new terminology, we really haven't seen before within that section. And then the second was contributions to permanent and term endowments, which before 103, we were seeing below the non-operating revenue and expense section. And then there was revenues and expenses related to financing, resources from the disposal of capital assets and inventory, and then lastly, investment income and expenses. Therefore, any revenues or expenses that don't fall into one of these categories should be considered operating revenues. So other than subsidies received and provided, government should be pretty familiar from the existing standards as to most of the items in this list. Therefore, Statement 103 specifically defined subsidies received and provided, since that's not something we had seen previously. Next slide. So what are what are subsidies received? Subsidies received, are resources received from another party or fund for which the proprietary funds do not provide goods or services to the other party or fund, and that directly or indirectly keep current or future charges of the proprietary fund lower than they would otherwise be. So what would be an example of this? Well, a public transit system that maybe is receiving annual payments from a local or state government for which it provides nothing in return. Well, these payments allow the system to charge a low fare, for maybe a couple dollars, which is substantially below the actual cost to operate the transit system. And this payment, in essence, is a payment from the local or state government is subsidizing this operation. So that would be a subsidy received. Resources provided to another party would be where resources are provided to another party or fund by the proprietary fund, for which the party or fund does not provide any goods or services to the proprietary fund for the payment they are receiving. And the resources are recoverable through the proprietary fund's current or future pricing policies. So an example of this would be like a water utility, which is accounted for in a city's enterprise funds, and maybe they receive an annual transfer, they annually transfer 10 million to the city's general fund every year. The utilities customer charges are set high enough to cover the cost of the operations of the utility, as well as make this annual transfer to the general fund. And the general fund is not providing anything in return to the proprietary fund for these resources. So again, the utility is subsidizing the general fund operations. And then lastly, all other transfers are also subsidies. Now, where these transfers are recorded in the statement of revenues, expenses, and changes in net position are going to depend on the type of subsidy, which we're going to see in the next section. It's going to depend whether it's an operating subsidy or if it's a capital subsidy. Next slide. So here we present a possible exception to non-operating revenues and expenses. Under GASB 34, revenues and expenses not normally classified as operating could be classified as operating if the transaction constituted the proprietary funds or the business type activities principal ongoing operation. And an example of this would be a proprietary fund whose principal ongoing operation is to provide loans to first-time homeowners. They could record the interest revenue expense transactions as operating revenues expenses. Now, under Statement 103, revenues or expenses that otherwise would be classified as non-operating should be classified as operating revenues or expenses only if the specific transaction constitutes the proprietary fund's principal ongoing operations. So therefore, under 103, interest revenues would be reported as operating revenues by the proprietary fund or business type activity. In the same example for the first, for a fund that is providing first-time homeowners loans. However, the finance expenses, though, related to the proprietary fund would be reported as non-operating, since not all loan programs are funded through borrowing. So therefore, this would be considered a financing expense in this example.
All right, I'm going to go over proprietary funds and business type activities resource flows statement changes. So there are going to be some changes to the statements for proprietary funds, only proprietary, keep that in mind, not governmental funds. So one of, there's gonna be two major changes. First of all, there's gonna be a new section for non-capital subsidies. And that is also gonna add a following operating income loss and non-capital subsidies line item that's gonna be new. So it's just gonna help highlight these new subsidy changes. So a long outstanding complaint of the business type activities, kind of going behind like what caused these changes, is that particularly colleges and universities have an issue where they're reporting general grant support, for example, and they receive it as non-operating revenue, but it makes it look like they're running a massive operating loss. And so they have trouble explaining how the operating income and loss line in their financials differs from that same line item in the financials of nonprofits and other private companies that report under FASB. It's not comparable at all. So Statement 103 doesn't turn that revenue into operating per se, but it does make changes to the income statement, resulting in now there's a performance measure that's more comparable to nonprofits and private entities that report under FASB. That's kind of like what this is getting at. So next slide, this is showing, there's some little graphics that Dean's gonna implement here. So the green font is gonna be what the new changes are gonna be in the financial statements, and then the red line item is gonna be what's being taken out. It's just a good visual summary of how the layout is gonna change under Statement 103. There will be a new section for all subsidies other than those for capital purposes, and this is gonna be added after the existing operating income loss line item total. So this added line item is going to act as the new performance measure that's more directly comparable to the operating surplus / deficit line item in financials of nonprofits, just to make it more comparable. Next slide has a more cleaned up version of what it's going to look like in the end, highlighting out the new non-capital subsidies detail section, and then the new line item total income loss of that. And next slide. So here's a good example. It's a little bit small, trying to fit in financial statement example, but this third section, you're gonna have your operating revenues at the top like before, operating expenses at the top like before. And then you're gonna have this new third section, non-capital subsidies. And I think what we're gonna see is that a lot of the transactions that will fall in this section are just gonna be transfers in and out. Kind of like what Leanne was saying, if something qualifies as a subsidy, like a water sewer fund that's transferring a bunch of money out to the general fund every year, year after year, obviously subsidizing the general fund. Those are the types of things that you're gonna see. That doesn't mean all transfers in and all transfers out go in this new section. Keep that in mind. You'll have to go back to what Leanne was saying about whether or not something is a subsidy and capital versus non-capital. But this is just a good example illustration that you can follow. Next slide. And Leanne's gonna take this. Go ahead, Leanne.
So with all these changes in the statement of revenues, expenses, and changes in that position, governments engaged in business type activities or in business type activities and fiduciary activities that present a statistical schedule, this is also going to affect. In the statistical section of separately issued financial reports, you're gonna have to distinguish between the operating, the non-capital subsidies, and the other non-operating revenues expenses, just like you did in your statement. You're going to do that in the statistical section. Also, you need to present your revenues by the major sources in the statistical section. So all these changes that you're making in your statement of revenues, expenses, and changes in that position, we need to incorporate into our stat section. Next slide, please. So what are some of the things that the governments can do to get ready for statement of 103? Governments should start reviewing the revenues and expenses currently being reported as operating, determine if they still meet the new new definition of non-operating, because remember, non-operating is defined in the standard, and then operating is everything else. So you need to look at your operating to see if it might meet the new definition of non-operating. Also, too, you need to review your non-operating revenues to see if they meet this new definition too. So maybe they shouldn't be non-operating any longer. And then finally, you need to determine if any revenues and expenses meet the definition of a subsidy. And if so, is it an operating or is it a capital subsidy? Because this will determine how and where it is reported within the statement of revenues, expenses, and changes in net position. And again, this is for all those governments engaged in business type activities or business type activities and fiduciary activities. All these changes need to be incorporated for those type entities. So now we have a poll question.
Indeed, we do. Statement 103 addresses the statistical sections of which of the following governments? And Leanne just mentioned them. Is it those engaged only in business type activities, those engaged only in business type and fiduciary activities, both A and B, or none of the above? So there is a related question here for state for public or state institutions. Would appropriations received from the state government be considered subsidies? And I think Lindsay mentioned this. This is the very kind of thing that is the reason for this change. That state appropriation aid for public colleges and universities, for instance, would and it will still continue to be treated as non-operating revenue, but the addition of this non-capital subsidies section and the new performance measure will give them a more comparable presentation to what not-for-profit and private colleges and universities are presenting, or utilities or hospitals, whatever happens to be the case, so that new performance line that is net income or loss and non-capital subsidies is going to be much more directly comparable to what you've seen as the operating income or loss line for a not-for-profit counterpart, because the things like state appropriation aid are being moved up into this new section. So it looks like we can end the poll. Most of you, almost 70%, said both A and B, and that is correct. But I'll remind you not to be alarmed if you're not getting the answers right. You just need to answer in order to get the CPE. You don't need to have the correct answer.
So another thing that GASB 103 is going to address is going to be these major component units. So the previous guidance was it either allowed the presentation of major components in one of the three ways, right? So you present each component unit separately in the reporting entity statement of net position and activities, or you include in the combining statements of major component units in the financial statements. And the third option we always had was presenting the condensed financial statements in the notes, the major component units in the notes of the financial statements. So what GASB 103 is doing is they're taking away that last option there where you report in the notes and just making them either on the face of the statements or in the combining statements. The no disclosure option was established prior to the issuance of GASB Concept Statement 3, which makes clear that information cannot meet the definition and criteria for more than one communication method. So in this case, the GASB concluded that major component unit information met the definition and the criteria for recognition in financial statements. So Concept Statement 3 basically states that the disclosure in the notes is insufficient for the information meeting the criteria for recognition in the basic financial statements. And so therefore you're going to either have them on the face of the statements or the combining statements. And then we have a couple of examples here on the next couple of slides where we'll show the statement of net position and the statement of activities. This comes from Appendix C in GASB 103, and it's just kind of showing you an example. I think a lot of people might already do it this way, so it might not be, a significant change for you. But again, this is the statement of net position. And then on the next slide, Dean, we can see the statement of activities. It's the same deal. We have that combining statement or the combining column all the way over on the right side where we have the component units. So that's a pretty simple little section there. Got another polling question here.
Thank you, Pat. Polling question number 7. Statement 103 allows which of the following presentations of major component unit information? Disclosure as condensed financial statements, as a statistical section schedule, in the letter of transmittal, or none of the above? One of the things that typically comes up when GASB re-examines old pronouncements like Statement 34 that predates most of GASB's conceptual framework is that what they required prior to establishing concepts for things like what an asset is or what a liability is or what information characteristics are necessary to be recognized in financial statement versus disclosed in notes. They often find that what they required before isn't particularly consistent with those. And so this is an example of that. And we'll talk in a moment about budgetary comparisons, and that's the same kind of thing that GASB Concept Statement 3 on communication methods defines where information should appear in the financial report, whether it should be recognized or disclosed in notes or presented in RSI or SI, and information can only possess the characteristics of one communication method. If it meets the characteristics to be recognized in the financial statements, then that's what GASB requires and not disclosed in the notes, because that wouldn't be an acceptable alternative. And that happens to be what, the primary reason why GASB eliminated the option to disclose condensed financial statements, because they concluded that this information meets the criteria for recognition in basic financial statements, and therefore disclosure wouldn't be an acceptable option. Looks like most of you have responded. So we'll end the poll and share the results. The correct answer, which a little more than half of you got, is none of the above. I suppose it's possible 30% of you said disclosure as condensed financial statements, and maybe you misread the question and thought it was asking which one is no longer allowed. That's the one that specifically is no longer allowed. A government will have to either show them individually on the face of the government-wide financial statements, or show them in the aggregate on the face of the government-wide statements, and then show them individually in combining financial statements.
All right, now we're going to move on to talking about the budgetary comparison part of 103. When I was speaking earlier on the MD&A, I alluded to this a little bit. So now we're going to go dive in a little more in depth. And this is actually, for me personally, this is a change I really like that GASB made. I'm not always a huge fan of GASB changes. I understand the theory behind them and the why. Just don't always think that they achieve their objective of supposedly being better for the users, such as the civet of it. GASB doesn't consult me when they make their decisions, so therefore they do what they do and we follow it as we're told to do. But this is one I actually do really agree with and think it's great that they're moving the budgetary comparison, or requiring it to be moved from the basic financial statements, which it was an option. They were encouraged previously under 34 to have the budgetary comparison as a schedule of RSI, but some governments did elect to have it as part of the basic financial statements. Budgetary comparisons now, though, that option has been removed under 103 and therefore can no longer be presented that way. One of the things that did remain the same, though, about budgetary comparisons is that the government is required to present budgetary comparisons for the general fund and for each special revenue fund that has a legally adopted budget. Statement 34, as I said, will allow the basic financial statement presentation because governments argued back when 34 was being researched and developed that the budgetary comparisons were as important as any other financial statement. Not a particularly conceptual reason for allowing it, but GASB agreed to compromise on the matter, and in practice, GASB found that 77% of governments present their budgetary comparisons as RSI. So they're hoping the change is not really going to be felt widespread, and a majority of the respondents to the GASB surveys in prep for 103 said that they thought RSI was a more appropriate place for the schedule. Now, as your auditors, we like having it in the RSI because if it's part of the basic financial statement, we have to perform more in-depth procedures over the basic financial statements, since that's what we're giving the audit opinion upon. And the RSI, we do perform procedures over it, but we don't have to go into quite the level of procedures since we're just doing an in relation to type of opinion on those presentations of RSI. On the next slide, we're going to talk about the variance columns and analysis that are required. Under GASB 34, whether you had a separate column to report, under GASB 34, whether you had a separate column to report, Dean, are you saying something? Okay, I think we had a little bit of background from Dean. Sorry about that. As I was saying, for the variance columns and analysis under GASB 34, a separate column to report the variance between the final budget amount and actual amount was encouraged, but it was not required. The governments were also were able to report a variance between the originally adopted budget and the final amended budget amount. Now, in practice, I typically have seen that governments only present the variance column between the final amended budget amount and the actual amount. GASB 103 is changing this a little bit. You still have the options of having both columns. However, I shouldn't say options. They're still wanting you to have both columns, but now they are requiring you to have both columns in there. And the reason they are making this change from the encourage to require is a result of them moving it to the RSI section of the financial statements, for which the audit standards say only what is specifically required as GASB can be presented in the RSI. So therefore, GASB had to either require the information, these two columns, or they wouldn't be allowed under auditing standards to be part of RSI. And users have found that they think the variance columns are useful to the readers of the financial statement. In addition, GASB 103 is also requiring that the government explain the significant variances between the original and the final budget amounts, as well as the final budget amount and the actual amounts as part of the notes to the RSI. Previously, this information was something you were supposed to disclose during your management discussion and analysis section under the budgetary section of that part of the financial statements. Now, again, they want you to move that to the notes of the RSI, which makes a little bit of sense. As we're moving into RSI, let's go ahead and keep it all in the same area of the report so readers aren't flip-flopping back and forth across the different sections. The next couple of slides, we're going to go over. Yeah.
Can I just mention someone had a comment in the Q&A? Anonymous, I think I know who it is, but if it's not who I think it is, then that means more than one person is commenting. So some people have concerns that this is this new variance column between original and final budget is just going to be even more confusing, and it's not exactly relevant data. I kind of see why GASB's having us add it, because some governments have some significant budget changes, you know. I think we just have to be really careful in presenting it so it's not maybe crossing pages and getting confusing, trying to follow which variance goes to what. It might get a little tricky. Do you have any comments on that?
I haven't read the specific Q&A implementation guidance on this particular thing. I do know that they will budget, you know, historically some places will budget the full 3 years in the first year it's received, and then have kind of in the roll forward or the bottom piece, it'll just carry forward to the next year. Dean, do you have an answer? I don't have an answer at the time, but I can get back to everybody.
Lindsay asked one question and you answered another one. The question that you just answered has to deal with a 3-year grant, and what I would say about that is Statement 103 doesn't change the requirements for budgeting or budgetary reporting. It just changes where the budgetary schedule appears and requires it now to be an RSI. However, that kind of grant was being reported in the budgetary comparisons before, it should continue to be presented in that manner. The question that, or really wasn't a question, it was a comment that Lindsay mentioned, was an opinion about the usefulness of both of those variance columns, and certainly there was a wide range of opinions in response to GASB's proposals about which of those variance columns, or one that isn't even shown here, which is original budget to final, which personally, when I was a financial statement user, I found more useful than either of these variance columns, but which I could calculate by adding them together. Yeah, there's a lot of variance, a lot of varying opinion, no pun intended, about the usefulness of this. But Adam got to the root of the matter, which was the auditing standards say, if it's in RSI, then all that you can present here is what is specifically required by the underlying standards. That's not a GASB choice. That's an auditing AICPA audit standards choice. And therefore GASB had two options: either require these variance columns, which users have overwhelmingly told them are valuable, or prohibit them. And because they're so valuable to the users of the financial statements, GASB's ultimate choice was to require them under Statement 103. And there's one other relevant question to this topic that came up How do we determine what a significant variance is? Is there a percentage? No, there is not. This is a matter of professional judgment. And so just as it was in the Statement 34 requirements for discussing significant budget variances, now under Statement 103, only the location has changed, not the basic requirement. And so government should continue to apply professional judgment to determining what's significant. Just as they are doing right now, they should continue to do that after implementing Statement 103.
Okay, sorry for the confusion, everybody. When we get the question, there's a tab for open and a tab for answered, and Lindsay was on the answer tab and I was on the open tab. So that was the cause for our confusion on my side. I apologize to everybody. Now, as we're seeing here, we've got an example of the RSI budgetary comparison schedule for the general fund. Some of the original components are still there. We still have our original adopted budget amounts. We have our final amended amounts. In this presentation, we're showing a variance from the original budget to the final. Then we're showing our actual amounts, and then we're showing our variance from final budget to actual amount. Now, this is not how it has to be presented. 103 does not prescribe that it has to be, the columns have to be in a certain order, so long as all 5 columns are being presented. So if you wanted to have the original budget, final budget, actual, and then your 2 variance columns, that is also an acceptable format under GASB 103. Now, this presentation here that we're showing you, that is on the modified accrual basis, and therefore there's no reconciliation between the budgetary basis to the actual GAAP results. That again is not being changed. You would still have to do that should you be presenting this on budgetary basis, just as you previously had to do prior to implementation of 103. On the next slide, we are also showing what it is to look like for a major special revenue fund with a legally adopted budget. This did not change under GASB 103. It is still the same requirements as it was under GASB 34. Again, we have the 5 columns being displayed here. They don't necessarily have to be in that order. So that's going to be a management's decision on how you want to present that when you do implement 103. Next, we'll talk about the required notes to the RSI. So as we've discussed and we have had some questions on, there is going to be a need to explain significant variances between budget and actual or original and final budget amounts. And what is determined, to reiterate, Dean, what is determined as significant is going to be up to the decision of management. Also, GASB 103 is allowing management to make the decision of how they want to present these significant differences or variances. In this example, we are showing it in a tabular format, or actually this is from GASB 103, so they're showing it in a tabular format. However, you could do it in a narrative format, as you maybe previously did in your MD&A when you were under GASB 34, or there may be some other format that you find better. Maybe it's a hodgepodge of these two. Maybe you do some of it in a tabular format and some of it in a narrative format. So long as you're meeting the kind of the spirit of what GASB 103 is wanting to get out of trying to explain these differences to the users of the financials, then you'll be in conformity with GASB 103. So Patrick talked about the major component units, and I spoke about the budgetary comparison changes. What do you do as the preparers of the financial statements? Well, if you don't currently disclose condensed financial data for your major component units, you're going to have to consider a couple of things. I'm sorry, and I said if you don't disclose condensed financial data. If you do disclose condensed financial data, first thing you're going to have to do is how many major component units do I have? And can they fit on the face of the government-wide statements as they're being presented without making it too small or unreadable, etc. If you have too many that are going to make these unreadable, or difficult to read, then you're going to want to go ahead and prepare a combining financial statement that will go in the back of the financial statements, so that you can then just have your total column for the condensed major component units. With regards to your budgetary comparison, you might as well go ahead and add the columns. Again, this, when I was speaking earlier about some of the changes in the MD&A, since the option has always been there under 34 to have these columns, you could go ahead and start making that implementation now, even though it's not required to be implemented for a few years, because you'd still be under, you'd still be in compliance with GASB 34. You'd also want to move your discussion of the significant budgetary differences from management discussion and analysis to the accompanying notes to the schedule and RSI. And again, go ahead and start thinking about how you want to present this information, whether it be in that tabular format, a narrative format, or a mix of both. Whatever you really feel is the easiest for the users of the financial statement to use, and how you're presenting it.
Okay, I'm going to go over the effective date and transition provisions of the GASB 103. We did have a comment question in the Q&A that like, could we partially implement 103? And yeah, you can't partially implement it, but you could definitely go ahead and make some changes that still comply with GASB 34. And I recommend that for sure, especially with MD&A. There's a lot you can do without saying that you're early implementing. But when we all have to implement is going to be for fiscal years beginning after June 15th, 2025. And so that's going to be fiscal year ends of June 30th, 26, September 30th, 26, December 31st, 26, and then March 31st of 2027. An earlier application is encouraged. So you can early implement if you want fully. But remember, you'd have to make sure you make all the changes, not just some of them. So it might be easier just to make, a few of the changes, like beefing up your MD&A and things like that, as long as it still complies with 34. There is something to keep in mind. A primary government that early implements will have to make sure that all component units also early implement if that happens. They have to all be under the new standard. So just keep that in mind if you're thinking about early implementing, if it affects component units or anything like that. So changes adopted at transition should be reported as a change in accounting principle per statement 100. So this is important. We'll have to make sure that there's footnotes describing the change in accounting principle when implementation is finally underway. And then also just include any related display and disclosure requirements related to that. So actually just a little bit of a backstory there. There was an intention that GASB had of proposing a 2-stage implementation where governments that had at or above 75 million in annual revenue were going to implement first, and then the smaller governments were going to implement a year later. But when the governmental funds changes got dropped, that got dropped as well. So that's kind of good. We're all implementing at the same time. But I think that would have gotten confusing. So just a little backstory there. We don't have to worry about that. So I think that's it for that. Any specific?
I'd like to follow up on what you were saying about
Yes.
and answering that question about partial implementation.
Yep.
There are really two issues here. One is, can you partially implement some of the provisions of 103 first, early, and then the rest on with the effective date? You cannot. As with just about every GASB pronouncement, the changes, if you're going to implement early, you got to implement everything. That's different from what we were saying about MD&A, and some of the things that Statement 103 will require, like avoiding unnecessary repetition, like being I'm drawing a blank on it. Let's just stick with the avoiding unnecessary repetition as an example.
I would say also just making sure you explain why something.
Yeah, the explanations of why. All of that is consistent with what's required by 34, but 103 is trying to make it more explicit. So you could make changes like that right now, that wouldn't be implementing 103. It would still be consistent with statement 34. However, the movement of the budgetary discussion to accompany the RSI budgetary comparison schedule, you cannot do until you fully implement statement 103. You can't do that right now. That's under statement 34, that is required to be in MD&A, and it has to stay in MD&A until you've implemented statement 103. The same would be the case if you were a government that uses the modified approach to report infrastructure assets. Statement 34 requires a section of MD&A to discuss the modified approach. Statement 103 is moving that discussion to accompany the modified approach RSI schedules, but you can't do that until you implemented statement 103. So there clearly are some things about the changes to MD&A that you can do right now because they are more stylistic or editorial in nature, but some of the structural changes to MD&A can't be done until you're actually fully implementing statement 103. Another example would be the variance columns. Adam mentioned those, and the possibility of starting to report those in your budgetary comparison now rather than waiting until statement 103 is implemented. You could also, if you're reporting it as a basic financial statement right now, you could move it to RSI right now, and that would still be consistent with statement 34.
I was also thinking like back at slide 53, the proprietary fund changes with subsidies. You can't do that unless you fully implement.
Absolutely not. And you can't, I would say that if the new definition of operating and non-operating leads you to conclude that you need to make a change in something that you've been reporting as operating or non-operating right now, that you should not do that until you've implemented 103, unless what you've come to realize is that you're misapplying the existing standards in that area, in which case you might have an error correction to make. But otherwise, you should wait until you've implemented statement 103 to make any of those changes to the proprietary funds. We have one polling question left and then some more Q&A. Let me launch this. On a scale of 1 to 5, with 1 being very little effort and 5 being massive effort, what level of effort do you predict will be required to implement statement 103? A is 1, that's very little effort. E is 5, massive effort, and you can, I guess 3 is neither very little nor massive.
Think compared to GASB 87, how hard is this?
Compared to statement 87, this should be nothing like that effort. The effort to implement statement 87 was very significant for a lot of governments, in part because they didn't necessarily have the information that was necessary to account for leases as long-term obligations or long-term receivables. And so there was a lot of front work that needed to be done just to be ready to implement 87. I actually don't think the standards themselves, were particularly difficult, but getting ready to implement those standards and making sure you had all of the information that was necessary to evaluate contracts and to report them as leases, it required a tremendous amount of work. With the governmental funds part of this project taken out of statement 103, I would say that this is closer to a smaller effort or maybe a medium effort, and not a high effort as might be required for statement 101 on compensated absences. I think if you're really going to take a great shot at MD&A and to comply with what statement 103 is asking, that will take some time. But that's the kind of thing I think that after you've initially done it, should be easier to do going forward. And some of the things like moving the location of the budgetary comparison, it is probably not going to be tremendously difficult for most governments, I would think. on the major component unit information. If you are a government that uses the condensed financial statement approach, you probably will have some more work to do in order to present basic financial statements, combining financial statements for the major component units that you report. So let me end the poll and share the results. About half of you see it kind of right in the middle, and I'm kind of with you on that. And it really depends upon what your government does right now, what your resources are for implementation. But at least as things stand right now, there's nothing else really that is on schedule to be done in fiscal year 2026 or 2027, depending on your fiscal year end. Although I think the GASB project on disclosure and classification of certain capital assets, that will be may have the same fiscal year effective date, but that is going to require very little effort. That's just talking about the level of detail that's shown in the disclosures for capital assets, and I think will be on the very low side in terms of implementation effort. So we have a little bit of time left for questions, or maybe we don't. It does actually look like now we've reached the 100 minutes. I do want to thank all of you for attending and for your good questions. And I hope you will join me in thanking Lindsay, Leanne, Adam, and Patrick for their fine presenting, and also want to make a pitch to you for CRI's Southern Grants Forum, which we hold in July every year. This year it's going to be in Fort Worth, Texas. And if you are involved in grants management or accounting for grants, this is the preeminent conference in the South and Southwest. And my understanding is there are a few spots left. So if you're really interested in this, take that QR code and register for it. And I'll look forward to seeing you, because I'll be doing some of the presenting at that forum as well. With that, thank you once again for joining us. I hope that you enjoyed this webinar. Follow us on social media and check out our website. And hopefully I'll see you again in the not too distant future.